Good evening. It's time for Real Talk Elgin with your host, Heather Keller of the Keller Group of KW Inspire. Heather is a leader in real estate sales and a foreclosure specialist with over 13 years experience. Real Talk Elgin is your place to get the latest information about the newest trends in real estate, learn about the industry, and ask any questions you may have for Heather. Join Heather live in Studio 14 in downtown Elgin by calling 847-931-1410. That number again is 847-931-1410. And now, Real Talk Elgin with Heather Keller.
Good evening, everyone. Welcome. I am your host of Real Talk, Heather Keller, licensed real estate broker with Keller Williams Inspire. I have about 14 years of expertise in all things real estate, but I do have a true passion for short sales and helping families avoid the foreclosure process. So I am here at WRMN 1410 downtown Elgin every other Tuesday. So I'm happy to be here. I love Tuesdays. I love being here with my guests and my producer, Leah. It's so much fun. So we are on season 2. Gosh, halfway through already. It is July, so more than halfway through. This is episode 12. Yay! So halfway
It's
through.
the bond fair. That's when we should have the hand clapping.
I know, right? I didn't hear
Get
it.
on my toes, Leah. Okay, got it.
So I love having this real estate show because there's a lot of people out there who may not know information on buying or selling, or maybe you're facing foreclosure and you have questions about that. So I try to have all things accurate for you guys, and here we are. So I started this show, gosh, it's been a year and a half now. Time really does fly. Like, I don't know what happened to July because we only have, 4 days left of July? I really don't know. But
you said kids are starting school. That was scary.
I know
to me.
my kids start 2 weeks from tomorrow, which is insane. But I started this show because I live in Elgin. I love the Elgin and the surrounding areas. And I wanted to start this show so I could provide real-time accurate information of all things real estate for not only Elgin, but really all of Chicagoland. And I always said, and I always start my show with this, but in order to succeed, you really have to move outside of your comfort zone. And that's what I did with radio. So, you know, my husband had a radio background and he's like, oh, you should do this show. And I'm like, eek, I don't know about that. But sitting here in front of a camera and doing it live on Facebook, it was daunting to me, but I stepped outside of my comfort zone. So I'm here, and you can always call in. So maybe you've been watching shows and you have a question. Call in. You can call 847-931-1410 anytime during the show, and we can answer your questions. So call in, or if you're on Facebook, you can watch it live and you can ask questions there as well. If you haven't already, please like our Facebook page, Real Talk Elgin, and go to our website, realtalkelgin.com. All of our past shows are on there. And you can also get a copy of my book, The Complete Guide of Selling Your Home as a Short Sale. It's on there, and we'll talk about that more later. We're also on iHeartRadio and wherever you listen to podcasts. So if you have kids and you got one of those cool Google things, which we have, you can ask Google to play Real Talk Elgin, which is fun. So later on in the show, I will tell you how you can get a free copy of my book, and we'll talk about the upcoming shows. And as many of you know, the Elgin location is now open. It's been open now for 5 weeks or so. When was the grand opening? It was June 15th. So, gosh, almost 6 weeks. If you're in Elgin or the surrounding areas and you're looking to buy or sell, then hire Keller Williams Inspire, or maybe you're looking to become an agent. We can help you out there.
And where is that located?
It is 1001 South Randall Road, across from good old Portillo's, and it's on the second floor of Elgin State Bank. So
I saw you have the nice sign below it right now.
yeah, there's a nice sign. The office is lovely. Actually, I was there today. I taught a class on short sales. So it's a great location, and you know, you can go there, meet with an agent, do that. So it's great. It's great to have that office here in Elgin. Even though I work from home, it's nice to have it there and for whatever we need. So again, you can call in 847-931-1410. Let's talk about today's special guest. So Mike has been on the show before a couple times. I love Mike, and I like Mike for so many different reasons. So he is Vice President of Mortgage Lending with Guaranteed Rate, and I've been working with Mike now for 5 years. So we met because I moved my mom here 5 years ago to work for me, and it was kind of a tricky loan. And so Mike came on board because he had expertise in new construction, and that's what she was purchasing. And it was very complicated. I probably was like a hot mess during that deal, which I never actually, you probably thought I was crazy, Mike, but I actually never asked you about that. But so we got through it. Mike got it done. And I really liked how him and his team worked, because there's just certain things that I look for. I'm very organized and detail oriented, and that's how he was. And I think communication, especially with real estate, is key. And so him and his team provided that, and it was great. So Mike is back on the show today. We had him here almost 6 months ago. We were talking about that. It was the beginning of February.
Yep.
So it was snowing. Now we're in shorts and T-shirts. So we wanted to bring him back to talk about what's going on. So we've had a crazy last few months for the market. So we're going to have a market update. We're going to talk about the forbearance, if things are shifting and all that. So Mike, thank you again for being on the show.
Well, hello, thanks for having me.
Yes. So I know we've talked to our viewers before about yourself. So why don't you just tell them a little bit?
So, all right, quick story about myself. I started in the business about 26 years ago now. I went to get a loan, and the guy that was helping me get the loan said, did you ever think about getting our business? I said, no. And I closed on my house. 7 days later, I lost my job. I called him back, and here I am 26 years later.
Meant to be.
Meant to be.
Mm-hmm.
It's always funny, like things come and happen, like the radio show. Like I wasn't expecting something like that. You weren't expecting that. It just, some things come in your life and happen for a reason, and here we are.
Yeah, so and I've enjoyed my career. I mean, it's I get a lot of pleasure out of people who are just excited to get especially their first homes. But even if it's not their first homes, anytime you can help them and they appreciate it, it goes a long way. And you know, to get people, they'll send me pictures of their kids playing in the backyard. I'm like, I don't know what I'm going to do with these, but it's awesome to see. It does put a smile on my face. I'm like, all right,
You become actually part of the process. You're part of the family at that point.
Yeah.
You know,
Yeah.
that's such an important decision people are making.
Well, it's crazy to get a phone call from somebody who, you know, I did a loan for in 1996, or
Wow.
you know, it's like, oh my gosh, and you know, now they've got grandkids, or you know, or you remember their parents, and you know, when you help them first, now you're helping their parents' grandkids helping. It's not that it happens on that often, but that's a lot of my
It's
transactions.
notable.
It's referrals from old customers, and it's fun hearing what they're up to. But that's my story, and now I'm having. It's nice the events are happening, and people are out buying homes, and I get to see people again. 6 months ago when I was here, it was like I had to sneak out of the house. We weren't supposed to be in public,
Right.
and
I know.
and this is it's great. It's great. So.
It's nice because, like, with real estate, it's a people business, and it's relationships. And I miss doing this. Like, we had the event at the office, and people were there, and I'm sure you're doing more things.
Yeah, I mean, my favorite part, like you're teaching people. I love to be able to get in, front of a group and help them, and it's just that's what I like doing.
So what is going on with the market? So back in February, I think between February and now, the market has been literally insane. Houses going for way over asking. So let's talk about, like, what's going on right now. What are you seeing, like, between then, since the last show till now, like rates, rules, changes, that sort of thing?
All right, let's start with rates. So rates were absolutely great when I was here in February, and it seemed like right at about the end of February, beginning of March, they seem to start going upward. But now in the last couple of weeks, they've come down, and they're about the same level they were when I was here in February. Average 30-year fix is below 3%, 2.8 something. I don't remember the exact number from a couple days ago, but so 30-year fixed rates are doing well again. Rates are great. It's helping keeping these homes a little bit more affordable as prices are going up.
Do you think, not to cut you off, but do you think rates are going to go up, or what do you see happening there?
If I knew exactly what rates were going to do, I wouldn't be here with you right now. I'd be somewhere.
Your prediction as the professional.
No, the Fed is saying they want to keep rates, the same. They don't want to raise rates too quickly. They're not ready yet. So I do think rates are going to stay in this range for a little while longer. I think they're going to have to. The prices of homes are, they went up so much. If you raise interest rates, people are not going to be able to buy those homes. And it's just going to cause a lot of problems. So I don't think they'll go up too fast. That's my personal opinion. I don't know for sure. But I do believe they'll stay in this range for a while.
Okay.
I had a friend in Wisconsin who's a real estate agent and ended up selling for like 40 grand over asking price.
Yeah,
Is
that's
that the kind of things that we're actually seeing, is that people are making that much more money on houses?
So
and
yeah, but and we'll talk probably more about this, but I think I'm seeing a slight shift. I don't think they're going for that much anymore.
Good.
So I don't know if the market's slowly trying to change, or if because people are settling down because school's getting ready to start. I mean, it could be a handful of.
Yeah, well, I think prices have gone up really fast.
Yeah.
Yeah.
And
Not sustainable.
correct. And not only that, wages haven't really caught up to prices yet. So it is making it more difficult for people to, so you'll see it. It's like, okay, well, wait, I can't afford this home anymore. So things will slow down a little bit. But as far as homes going over list price, what's happening is people are taking offers and Heather, you would know this more than I would, but what we're finding out is these borrowers, when they're putting offers in on homes, they're getting asked if they have enough cash to come in with the difference between the asking price and the price they're actually putting the offer in on. So if the asking price is $250 and they want to offer $280, they're asking if they have an extra $30,000 because the reason for that is if the home doesn't appraise for $280, then the buyer's going to have to come in with that additional $30,000 to make up the difference.
It's crazy.
So
Right. Yeah.
Yeah, so I did accept. I have a couple of examples, and actually one I'm working on. Mike and I are working on. So it's a condo, it's a family, and it's a little bit more of a complicated situation. But they have a condo to sell in Schaumburg, a townhouse condo, and we had listed it back in April when I think things were really super hot then, and we got I think close to $5,000 over asking price. Well, that deal ended up falling through because of financing and some HOA things. And so Mike's helping them because they want to sell that and get into a bigger home. So,
Okay.
it's a tricky situation. You're selling and buying. So the reason why I say I think the market is shifting a little bit is because of this listing and one other example I have. We got about $5,000 over asking. Then when that deal fell through, we canceled and relisted it, and now we have an offer that's about $15,000 less than what that offer was. And it's taken a little bit while to get that. So before you were listing them and you were getting a massive amount of showings. I think houses and condos are probably a little bit different, though, wouldn't you say? Like, I'm still getting a lot of showings on my houses, but I think the condos with the HOAs are a little bit different.
yeah, some of the other stuff we're seeing is the lower priced homes, the number of homes available aren't there. there's just the supply is a lot less.
Yeah.
So that's causing some grief for people too, especially if they're first time home buyers or first time move up buyers. Getting them to qualify for these homes is difficult. There's just not a lot. So the fight for these homes is just crazy, and it was really causing prices to go up. A lot of the people who was getting pre-approved in March and April and May, they're finally getting homes that are available for them to buy. It's taken them 4 or 5 months for homes to actually be available.
Available or affordable?
Well, it's both. I
Yeah.
mean,
Yeah.
Uh-huh.
So available meaning like I listed a house today, and we already have like probably 10 showings on it. It's an actual house. But what happens is when the March, April, when the market was extremely hot, buyers were coming in and submitting offers. So we would get like 10, 15 offers on a house. And so we would go back and ask for highest and best. So a lot of times the buyers would come back and say, okay, I'm going to waive inspection, or I'm going to pay the difference, like Mike was talking about for the appraisal. So if they offered $280 and maybe it was listed at $250, if the appraisal came back at $250, then they would pay the $30,000 difference. I mean, that's how much these people want to get.
It's like
into
winning
houses.
a bid on something more than it. You know what I mean? That's
so
what
I
it
think
seems
a lot
like.
of buyers were losing out on bids, and you just have
Right.
to keep offering and offering, and some may just get frustrated and not end up buying. But it's not the market we're used to. It's just was different.
Yeah. So I one of the things I read the other day, and where I think there is a little bit of a shift as well, is supply. Supply. See, I just pulled this chart from Fannie Mae, or Mortgage Bankers Association, about 2 weeks ago. The supply nationwide was about 2.5 months worth of homes. Traditionally, 6 months supply is a healthy average supply. Okay, so this is 2.5 months, and in some markets it's less than 1 month. And I think it was Austin, Texas, for example. They were down to like 0.8 months worth of supply. It's just
Oh my
ridiculous.
gosh.
Wow.
So 2.5 months. But now new construction homes, and we could talk a little bit more about this too in a few. But new construction was at 5.5 months supply last month, and now this month they're up to 6.3 months. So there's even more new construction homes available for people to come by. So I do think the supply is going up. So that's going to help. That's going to help people be able to find some homes. It's going to help keep the prices down, keep it affordable, and
Yeah, I agree with you on the new construction because we hadn't been, like, my kid's school is in a neighborhood, and we really haven't been back there since they were out of school. But my youngest had his birthday last week, and so I went and got cupcakes made and had to go pick him up at a house in the neighborhood by the school. And we drove past, and I could not believe, and, you know, they got out June 8th in what, 6 weeks, 7 weeks, how many houses are either starting to be built or are already completely almost done. I mean,
Wow.
it's really crazy. So the and I don't do much with new construction, so maybe Mike, you can give us those numbers or, you know, estimates. But is new construction really hot right now because people can't get into other houses?
Yep, absolutely, all over the country. Here, because of the landscape of the Chicagoland area, there isn't a lot of new construction available unless you get further away from the city. But it's absolutely a great option, and the builders are doing very well, the large builders in town. And it is a great option for you because, you've got these other homes. And if they don't have the home ready now, they might have one down the road. Now, where that causes challenges is, okay, well, do I list my home today? Do I wait 6 months to list my home right before the home's ready? Do I make a double move? And that's something we can figure out. Everybody's different. Everybody's situation is different. But the new construction home is definitely a great option for people to look at if they can't find what they want on the existing market. And especially if you go in, you could pick the colors you want right away. You don't have to worry about coming in and painting, changing furnaces, anything like that. So it is an absolute great option to do. And then if you're a lender who does a lot of new construction, like me at Guaranteed Rate, we do offer long-term locks. So if you buy today and the home's not going to be ready for 6, 9, or 12 months, we could actually lock in your interest rate at today's rates instead of later.
Oh, I didn't know that.
Yeah, so that's a big benefit. And again, most lenders won't do that, but you have to be a lender who does a lot of new construction, and that's how you can lock in at today's 2.875, 2.5, whatever the interest rate might be. Get that locked in for up to a year. Build the house. And if the house is ready 6, 9, 12 months down the road, you'll have this rate instead of the rate, whatever it is, a year from now, if you're worried about the rates going up. And then you can decide, do I list my home today? Well, I list it now. I get the price today. And then maybe I have to go rent for 6 months, or I live with family for 6 months. Or maybe I can rent back from the people buying my house for a couple months. You could figure that out. And that's where you come in.
There's always an option. And moving twice, especially with kids, isn't ideal. But if you're out there and you've made offers on several houses and you keep getting outbid or whatever reason, then you can look into new construction. Is the prices? I mean, like wood and all that, the prices are high. So is new construction higher than if you were to go buy like a regular home? I guess.
Well, it could be, but for the first time was it March? For the first time in, I think it was 20 years, the average new construction pricing or median new construction pricing was about the same as existing. Generally, there is a spread, okay?
Right.
And that spread will always, is always a gauge that builders will use on how much they could sell their homes for in the market. But, the existing homes, because of the lack of supply, that cost is carrying over into the existing homes. So
like if you have a house for $250 and it ends up selling for $30-40 grand, you might be able to just go buy a new construction at, like, say the $290 and be fine.
Yeah,
right.
Well, exactly, and you won't have to do any of the upgrading that you want to do.
So explain a little bit about new construction. So how it works is the new construction companies have like a base price, and then is that how it works? And then they upgrade from there. So if you want a finished basement, then they tack on depending how much it costs for a finished basement, that goes on top of the base price. So you're right. If they add on those things, it may just be what you're going to pay for a house that's 15 years old. I didn't think of it that way.
Yeah, and again, it's and the builders will do it different. In Chicagoland area, you'll work with a lot of different production builders, small and large. So you won't have to go out and get a construction loan and then let them find a contractor to build your home and get plans and specs. You walk into the builder or you contact the builder. Some real estate agents work directly with different builders, and you can actually pick a home. They might have 5 or 6 different models. Say, oh, I like model A. All right, great. I want to put it on this lot over here on the corner. Great. Well, that's a bigger lot, so we're going to charge you $5,000 more for that. Well, it's worth it to me, so okay, I'll do that. And then they build the house. What color do you want? Do you want white walls, gray walls, tan walls? Okay, red brick, white brick, siding, and then you can kind of decide from there. And then they build it, and they say, all right, it's going to take us 6 months, 3 months, 9 months, however long, and they build a home. You get approved today, and then you will have to update it. But they want to make sure if you're buying a home for $300,000, they want to make sure you could qualify for the home at $300,000 6 months from now when the home is ready. And when the home's ready, we do an appraisal, we do an inspection, make sure it's done. And now you got a brand new home.
How do you, I'm curious, how do you make sure that they will qualify for it 6 months from now? And we're in a life of uncertainty, and like with COVID and things like that, people lost their jobs. What happens then?
Yeah, well, again, that's always going to be a problem, but because you don't know for sure. So you are qualifying them based on today. So you are qualifying them based on today. The builder, they're going to put stuff in their contract that says, hey, if you lose your job because of COVID, hey, too bad, or this is how we handle it.
There's an out clause. There's got to be somewhere along the line to redo it.
If I bought a home in January that was going to close in August and I lost my job today, I probably can't really afford the new home anyway.
Right.
Yeah, they check all that
it's
stuff
a parting ways.
before closing and all that. So that's why you see some of these brand new houses that maybe were already built, and you don't have to really wait for it. It's probably because the deal had fell through with the previous buyer for whatever reason. Yeah,
and sometimes too, the builders they'll build homes on spec, so they have a home available because someone comes in, I want one of your homes. I want one of your homes real bad, but I don't have 6 months to wait. I only have a month. Okay, well, this one's ready. So in this market, probably isn't happening as quick. In some different markets, some different towns, so in parts of Florida, I know there were a couple builders who at the beginning of the year, they said we're going to build X number of homes. And they did that because they knew exactly what the cost was going to be, and that was it. They bought all their supplies and they just started building in January, so they wouldn't have to worry about what's going on.
Yeah, wow. Very interesting information about new construction. We'll talk about some more stuff, but we're going to take a quick break, and we will be back shortly.
Welcome back to Real Talk Elgin with real estate expert Heather Keller. Call 847-931-1410 and Heather will be happy to answer your questions about real estate. And now back to Studio 14 in downtown Elgin for more Real Talk Elgin with Heather Keller.
Welcome back, everyone. So before we finish talking to Mike about all this interesting stuff about the market, remember that you can call in and ask us any questions, 847-931-1410. Again, that's 847-931-1410. So if you are interested in learning more about short sales and the process, I did write a book a while ago, The Complete Guide to Selling Your Home as a Short Sale. I would love to get you a copy. If you go to our website, realtalkelgin.com, at the corner right, you can click on Short Sale Book, and it will take you to my website, and you can fill out the form. We can drop you off a copy. We can mail you a copy. We also have an online version now. I'm pretty proud of myself for that because I am getting with the times. So we have that. Or you can send us a text, 224-407-2220. Again, that's 224-407-2220. But if you are out there and you're struggling, or maybe you know someone that might be struggling, this is a great resource for you. So I would love to get you a copy. We have the rest of the year planned as far as shows. So if you go to Real Talk Elgin on Facebook, all of our shows are there. So make sure you tune in. We're going to have more on foreclosures, short sales. A couple weeks from now, we're going to bring back Sean from Keller Williams Inspire office and talk about rentals. So we have a lot coming up for the rest of the year. So please be sure to tune in. And let's start talking again, Mike. I know before we stopped our break, we want to talk about appraisals. You mentioned that to me. So what do we need to talk about as far as appraisals go?
So if you have homes listed at 250 and people are putting offers in at 290 and they need the extra 40,000, the reason is they're concerned about the appraisals. So are these homes appraising out? Well, the answer is most of them actually are, because the market, the sales are supporting each other. Where in the past, if home prices go up this fast, it's very difficult to support the large increases. But generally, the appraisers are doing a really good job. Don't get me wrong. There's some places you can't support the values going up. But the appraiser.
Have you seen lower appraisals coming in, or is it mostly high? Or now maybe you were saying high before and now lower. I'm just curious.
So with the purchase prices, they are coming in a little bit lower than what the purchase prices are. Some, not very many. For the most part, like I mentioned, these appraisers are doing a good job finding out that these homes actually are worth what the people are offering to pay for them. But if they don't, that's where the negotiation between the buyer and seller has to come in, and that's why these sellers do want, you to have the extra money available in case this does. So the appraisers are supporting that these homes are worth what you're paying for, because that's a question I'm getting. It's like, well, are we overpaying for these houses now? And, should we not buy because prices are going up so fast? That was a question I got asked just today. And I said, buying a home you're not buying a home for the short term most of the time. So, 10 years from now, how long you live there? 10, 15 years. Okay. If it goes down next week after you close, is it going to, does it matter? No, it doesn't matter until 10 years ago till you sell it. So, and then not only that, the appraisers are going to tell us where the values are. And these appraisers, for the most part, are actually coming through. Not everybody, and some realtors might say, well, they're not, but from what I'm seeing around our company, in general, most of them are doing a really good job, and they're coming through with what we need.
I think we have a call.
Yeah, I'm just going to take a quick call here.
Okay.
We had Mitch calling in on the line. He had a question for you guys tonight. Let's go to the line. Hello, Mitch. Are you there with us?
I sure am. Can you hear me?
Yep, I can hear you well. Can you guys hear him?
Yes.
All
Hi,
right.
Mitch.
What's your question, Mitch?
I actually have two, if that's okay.
Sure.
One is on the news break that led into this program. It was reported that year over year, or YOY, housing had gone up in Phoenix by 26%, and then it was like 25% in San Diego, and then Seattle was third with some crazy number. What is the and I apologize if you already mentioned this on the program. I'm kind of multitasking. What's the percentage in the Chicagoland area, would you say? And number two, what are the best kind of buys in the northwest suburbs if I'm going to be shopping for a home soon?
Okay, Mike, do you have the numbers or statistics on maybe the prices now? Because he said what, Seattle.
So, Mitch, I think you were listening.
San Diego.
Yeah, you were listening to the report that was going into our opening of the show. So that wasn't actually the report that we did. I caught a little bit of that. I don't know where those numbers came from. So I apologize on that one. That was a report that was going into our show, not our numbers.
Of course.
Quite ironic, isn't it?
Yeah.
I do know, Mitch, that they throughout Chicagoland, most of the markets, it is a lot higher. I don't know if it's quite where they're at.
Yeah. Every neighborhood's different, actually. And no, I don't have that. I don't have the actual Chicago numbers here. But if you go to my website, at rate.com/Mike Dote, there's a research tab on there, and you can plug in whatever zip code you want, and it'll tell you what the market's been doing over the last up to 3 years.
Can you give me that website again, please?
It's rate.com/Mike Dote, MikeDote.
Got it.
And on there's a research tab, and you can look up, you can plug in any zip code you want, and you can get all the numbers you want, and what the sales are, what the price per square foot is in the town. And it's
nice
actually pretty
site.
cool.
So a second part of the question then was, where would you recommend somebody, if they're looking to buy in the northwest suburbs, where would you recommend they look?
Wherever Heather's got a listing.
So, I'm pretty much all over Chicagoland, especially when it comes to like short sales. So, I don't know if you're looking to buy now or wait, but I'm in the Elgin area. I love it up here. Are you, what's your situation? Are you looking to purchase a home? Do you have a family?
Yeah, so I'm taking care of my mom. I moved back from Las Vegas recently, and mom's 80. So I'm going to be re-entering the job force here pretty soon. I'm a former IT director, so what I plan to do is to just stash up a ton of money for a while and then buy something. And so I guess to answer your question, I would probably be in the interest in the market rather like 9 months, 12 months from now, something like that. So maybe I'll call back and ask you what the market's like back then.
Yeah, so Mike, Mitch, write down Mike's phone number because you may not be in the market this exact moment, but you need to plan and have some sort of game plan in place so you can then purchase, a year from now. So if you write down his information, then he can help you and stay in
Mike,
contact
what's your
with you.
phone number real quick? We got therate.com/Mike Dote, and then your phone?
My direct number is 847-772-8409.
Hopefully that helped you, Mitch.
Of course.
Good luck.
You so
Thank
much.
you for
I really
listening.
Appreciate it.
You bet.
Yeah,
Thanks,
of course.
Mitch.
Great show.
Bye-bye.
See ya.
Long-time listener, first-time caller.
Yeah, right? I think he said that before when someone called in.
But that's good. I mean, it's good to know. First of all, obviously, there's a bunch of different statistics that can go on. But from the idea of what they were doing, how do we rate in the Chicagoland area compared to around the country?
I don't know. I don't know. They are going up here as well as everywhere.
I think
around
it's
the
uniform around the
Yeah, like
there are areas that are going up even more. I mean, there's areas where they've gone up 100,000 in a year,
Yeah.
where maybe here it might be 40 or 50. That's in the similar market, but I don't know without actually doing the research.
That's actually a really, really good question. But like Keller Williams offices are all over the country. So I'm a part of these groups with agents in California and the East Coast and whatever. And there's people commenting on there how frustrated they are because their buyers are offering, I think one of them was like $200,000 over list price. That must have been in a higher price market. But it's just, I think generally the whole United States is like this. But, there's probably different areas where maybe it's not as crazy.
So when somebody does that, that's, I guess, the one thing I still don't get. Are they just trying to bully everybody out of the bid, to get the high bid? Is
They
that pretty
want
much
that
what
house
right. So it's
that
like
bad.
whatever it takes kind of thing, right?
Yeah. Like
Crazy.
The craziest one I had was in Aurora recently, and we listed it at $249,900, got $292,000. So what was that? Just over $40,000.
Right.
Insane. They waived the inspection, and they said that they would bring money to close for the difference of the appraisal. The appraisal did come in back at $292,000, so they didn't have to worry about that. But that's just, they're not getting an inspection, and the appraisal, what if it came back at $260,000? Then they'd have to bring $32,000 to closing.
I feel like it's a poker game that somebody's saying, okay, I'll throw this in there and I'll take this, you know what I mean? Just to be able to walk away with a victory.
Well, look at it this way. They love the home. There's only so many available. They really want that home, or they need that home, whatever it might be. And the rates are so low now, they can't wait till next year. That's in
It's
their
the
mind.
timeliness.
And really, if they pay an extra $10,000 more for the house, it's very minimal on the payment. It's $40.
Yeah.
And not that $40 isn't a lot of money. I'll never say it's not a lot of money because it's not my $40. But that's how they're looking at it. Is if I'm going to pay just a little bit more, I'm going to lock in this cheaper money. I'm going to get the house I want. I'm going to keep it there forever, and I don't have to worry.
That's true.
Interest rates are so low, so people are able to qualify for more of a house. So that's why people are out buying right now. But it's hard. You go to sell a house, it sells in a couple days or a couple hours in some cases. Then they have to go find a house.
Yeah, and I think
That's
some of
what's
these
hard.
people, they're probably going a little nuts being stuck in their house the last year. They needed a new
house.
Probably.
Yeah,
I
like-
think that's why remodeling was so popular, is because people just looked around and saw the changes they wanted.
That's what we did. I mean, we've been trying to remodel our house pretty much all year now. I'm on my last project, and I told myself I'm taking a break. But, being in the house for so long and, all day, every day, there was like, okay, this doesn't work. So, we had to wait 2 months just to get the cabinets done and the new countertops installed for our kitchen because they're so backlogged
Busy.
on people
Wow.
remodeling. Yeah, it's been crazy. Or even like furniture. You go and buy furniture and you wait 2 months for that. So anyways, okay, Mike. What about rules? So is there any rules that have changed or anything else we need to know from February till now?
So, things had tightened up quite a bit over the last year, but now they're pretty much back to normal. Almost everything is back to where it was before. General rule, FHA wants 580 credit score, conventional wants 620. We don't have to do a lot of the extra verifications of employment like we used to. If you're self-employed, we're still gonna check, make sure that business is actually active and making money. A little bit closer, but generally the rules are almost back to normal, what they were pre-COVID, pre-initial quarantine.
Really? Wow.
One of the rules that's actually better now than it was is FHA loans. FHA loans, if you had student loans that were in deferment, you weren't making payments on, or you would still be required as a lender to calculate a payment of 1% of the student loans. So for example, if somebody has $50,000 in student loans, we'd have to calculate a payment of $500 per month and use that in their qualifications. So even if the student loan was deferred, we'd still have to count $500 per month in the qualifications against them. But now they just recently changed that to 0.5%. So now it would only be $250 a month. So now these individuals who have student loans, in this case, they would qualify for $250 more per month in home.
That's a lot.
It's a lot. That's that's $50,000. I mean, it's a lot of home, a lot more home. So so that's a great rule. That's helped a few people who are looking to buy something. They couldn't find anything in their price range, and now we're able to add another 20, 30,000 to their search.
What about so FHA, and you're doing VA. You do VA, correct?
Absolutely.
Okay. So FHA hasn't changed much. I was going to ask a question, and now I literally...
Well, you're talking about VA. I don't know if I want to remind everybody from our last meeting, I was telling them $1.5 million with no money down, VA loans. If you have VA benefits, you could buy a home up to $1.5 million with zero down, no more monthly mortgage insurance. So you're talking about getting interest rates somewhere in the 3% range with no mortgage insurance, no money down on a VA loan.
Wow. So what is a payment like that? Do you know off the top of your head? I'm curious. Like 1.5 million? I didn't know it went that high.
Yeah, I mean, you'd be looking at somewhere in the, what would that be? I can't believe I don't know. You're probably
5,000?
you're about 6,000 for principal and interest. I wish you put me on the spot. I'm usually really good with these factors.
Next time we need to bring calculators.
No, I mean, it's, but again, if you're a veteran, if you have VA benefits, let's go. Let's buy a house.
Yeah, and Mike handles all that, so you can contact him. But, I remember what I was going to say. So are there any other special programs out there? Maybe ones that started back? I feel like we talked about some in February. Maybe they died out.
So the state had IDA. The state had a program. It was actually pretty awesome. It was a little tough to get done. It took a long time, but they had this program where you can borrow an additional up to $40,000 to pay off student loans. They ran out of money. The state ran out of money. This program was so successful.
Wow.
So I don't know if they'll come out with something like that again in the near future. Hopefully, but nothing really special on the purchase end that's there. Jumbo loans are back to normal if you're looking at the higher price. They're not completely, but they're back.
So what is jumbo? Like, what does it start?
Anything over about $548,000 is considered a jumbo mortgage, and
are those interest rates higher?
Almost barely. So, for example, I quoted somebody yesterday. The difference was 0.125% higher on the jumbo loan for a 30-year fix for a $600,000 loan versus $548,000. So, I mean, it's.
So 548.
Yeah, I mean, it's and it's not as. I mean, there's still a little harder to get a jumbo loan than it is a regular conventional loan or FHA loan, but it is definitely a lot easier today than it was 12 months ago.
Interesting, right? So today I taught a class about short sales with one of my attorneys at the Keller Williams Inspire office in Elgin, and we got a lot of questions about forbearances, and I think we've talked about this before, but because the eviction moratorium is ending, which is 4 days away.
Is it really?
It's ending.
For real?
Yeah, July 31st. And as far as I know, according to my attorney today, it is not being extended. So there's a lot, and the stats that he provided were crazy. So can we talk just a little bit about, like, how does the forbearance affect maybe buying a new home? What's going to happen with all that? Like, I don't know how it works on your end.
So there's rules. There's rules in place that will allow people to buy homes or get new loans, but they have to end the forbearance. So what you're seeing is individuals, they're contacting the bank. They're like, I'm back to work now. I can end the forbearance. Okay, well, theoretically, after the forbearance, you're supposed to come up with all the payments you didn't make over the last however long in one lump sum. Well, that's not the easiest thing to do if you haven't worked in the last 12 months. Okay, if you can't do that, then they say, all right, well, what we'll do is we'll do a deferment, and they defer the payments to the back end of the mortgage as long as you're comfortable with the same payment. Hey, I'm comfortable making the exact same $2,000 a month payment. Can we just move it to the back of the loan? I'm back to work. I'm fine. I have no problems. Yeah, no problem. And the banks seem to be taking care of that right away. They send them a letter saying, all right, as of August 1st, you're back to making your regular mortgage payment, and the payments that you missed are now on the back end. Your principal balance is X number of dollars higher than it was before, and you'll pay the loan off 12 months later than you initially planned. All right, no problem. If you can't make the payments because, well, I never really got back to my full-time job. I had to go take a part-time job. I can make smaller payments. Can we do a modification? Sometimes you will have to go through and set up a modification. But I am seeing people get the deferment set up and get them done, and then they're back. And then depending on the type of program you're going to do on your new home, they need to see that you made maybe 3 payments on time and that you are truly back to normal. In some cases, 6 months. Again, it depends on your situation, but 3 to 6 months of payments and you're able to get another loan.
So you're recommending to do that homework ahead of time before trying to get another loan, so that it shows that you've got, promise to pay maybe.
Yeah, absolutely. I mean, if and again, there's always exceptions to the rule, but you need to show them. If you think about it, I haven't been able to make a payment for the last 12 months. So am I going to be able to make new payments on a brand new mortgage today?
Right.
So you need to prove it somehow, and why are you going to be able to? And that's really what the banks are going to be looking for.
Yeah, but so also if you're going to sell, then a lot of people. I think there's a lot of gray area with the forbearances and everything that has gone on, but that money isn't just free money. It's going to be on a deferment, or sometimes they want the full balance. Sometimes people aren't going to be able to get a loan modification, but that money that they didn't pay for a year, that is going to be on the loan, so they have to take that into consideration when they're selling. So maybe the balance was $300, but because they didn't make a payment for a year and it was on the forbearance, it's then going to be what, $330, or let's just you never know. So you have to take that into consideration when you're selling, and I think a lot of people don't.
Yeah, I don't. I have this theory and this logic that people ended up taking advantage of that and didn't necessarily need to take advantage of that, unfortunately.
Absolutely.
Yeah, they did.
I mean, and there's millions of people out there who needed it.
Right. That's what I mean. That's a tough one to swallow.
And during their forbearance, a lot of people calling, hey, I hear rates are great. I want to refinance. Okay, yeah, no problem. But you haven't made a payment in 6 months. Why would I? How are you going to make the payment now on your mortgage?
Did you see a lot of that?
Yeah.
Yeah.
I mean, people would have, and I understand. It's like, well, I didn't want to use the money in my savings to make the payments, but still, I mean, it's.
Yeah, well, you can't have all the good stuff and not sacrifice. You know what I'm saying? It's like you can't say, okay, well, I'm just going to make myself better and better and better, but then realize, okay, I'm going to lay low and not make any payments because I don't want to use my savings, like you said.
Well, I think a lot of it, and some people just didn't, not necessarily just took advantage, they just didn't know.
I think there was some education.
They don't explain it very well.
Mm-hmm.
The
Yeah, they
thought,
I could go into forbearance for free. All right, no problem. Let me just do it. That's fine. I'll take advantage of it. I'll save some money or whatever, and then realize that, well, now you can't get another mortgage yet. Mm-hmm. And you're going to still have to pay this money back. Really? All right. Well, you know what? I'll just start paying it. I'll pay it up to date. I got $100,000 in the bank. I could come up with the $6,000.
I agree with you. I think there's stone-faced people that really thought that didn't know. It's not their arena. They're just not educated enough. In that area. Because exactly. Or sometimes it's hard to read through those documents.
Oh, they're very hard.
Yeah.
But all you got to do is call in. I mean, we could help with that, but. It's very gray. So there's lots of documents. And I even had someone come to me and say, they put me in a forbearance and I didn't even ask for one. So I don't know. There's just a lot going on with them. I'm glad that they're not extending it because I think it's just going to make things worse.
Yeah, that's got to follow its way through and get back to normal in that one.
Yeah, I'm already seeing it. People are because they're realizing it's like, okay, well, wait, these rates are low. I want to be able to go buy. They're back to work. And they're taking care of what they need to, and they're getting back on track. So I am seeing a lot of people come out, and their credit has been clean, so they're going to be able to sell and buy, and that's what they want to do. They want to they want to get out of their houses that they've been stuck in for the last year. So
Buy something new construction, right?
Yeah.
I mean, again, and I could argue either way. What makes sense? Some people it might make more sense to buy existing, but if you're having trouble finding a home, absolutely go out there and look at some new construction. I mean, there's enough of it out there. You just get out there and look, and you'll have more options. It's more options, better than.
So you can go to any new construction site, but they'll ask you, like, if you're working with an agent, you just have to make sure you tell them that you're working with one. Otherwise, then they'll just assume you're not, and then that agent can't help you.
Ask your agent to pull up some new construction homes that are available for you. That would be the best way to do it. Make sure you're pre-approved. A lot of these builders work with lenders already, so they might not want to work with who you've been pre-approved with. But, it's definitely worth a look. It'll give you more options, and that's kind of what people need right now because there's just not a lot of supply.
And can they do that by going to rate.com/Mike Dote? Do that on there, on the website?
Yeah, they can do that
So you
as
can
well.
literally just, I love all the technology that Guaranteed Rate has, because you can just go there. Isn't there an app? I know I'm so horrible at this, but there's an app. You can just get pre-approved right there, right?
We have an app for that. Yeah. I mean, ideally just go to the website, make it easier. You don't have to download anything. You click the apply now button. 10 minutes, you're done. I'll get notification. And sometimes in some cases they'll leave it without even talking to me. You'll get your pre-approval letter. So,
They should have a good site. They had a Super Bowl ad.
I know. And they own White Sox Stadium.
if you believe you will. That's
Funny story. So my husband, that's how we met, was in mortgages, and he worked at Guaranteed Rate before he came to the place that we met. And so he did a lot of refinances, which is funny, like him working in a bank. No. So my last question is, have you done a lot of refinances? Are refinances still popular? And are there any changes for
Refinances
that?
are becoming more popular again last couple of weeks. And what's happened about a week, so rates have come back down. But not only that, in the last week, about a year ago, for Fannie Mae and Freddie Mac loans, they added what's called an adverse market fee. So where you had to pay an additional 0.5 point or 0.5% of your loan amount, so on $300,000, $1,500, you had to pay an additional $1,500 in order to do a refinance versus if you did a purchase. What that equated to is usually like 0.25% in the interest rate. So if a purchase, for example, was 3%, the refinance might be 3.25%. So it slowed people down from refinancing. Well, now you don't have to pay that fee anymore. They just got rid of it. The reason they had that fee was, some people call it like a tax, but the idea was because the market was so bad and they were worried about people going into foreclosure, people not paying their mortgages. Fannie Mae and Freddie Mac, as protection, they added this extra 0.5 point, 0.5% of a loan amount to refinances so they could cover. That's gone. So definitely it's a great time to refinance again.
I would recommend it. I use Mike, so I'll shoot that
Yes,
out there.
and my
I would
mom just
highly
refinanced
recommend
with
it.
Mike.
Yep.
So call Mike. So, wow, that hour
That was
went by really, really fast. So we'll be back in 2 weeks with episode 13. Sean Israel is my rental agent that helps all of my clients who've gone through bankruptcy, short sale. We will be back in 2 weeks. Don't forget to like our Facebook page, Real Talk Elgin, and we will see you all soon. Thanks, and have a great week.